guys, welcome back to my channel. So for today's video, right, we'll be covering what has been happening the past few weeks and why new launches has been selling out so fast. And also I'll be touching a little bit on the Sen, which is an upcoming launch in the end of October. So stay tuned to the end of the video if you want to find out more. So for those of you that hasn't been following the new launch market, let me give you a quick update, okay? So right now we have Penrith sold at 96%, this is at Queenstown area. Sky at Holland 98% sold, this is at Holland Village. Faber Residence, so this is near West Coast area, 85% sold. Last but not least, the most recent weekend, Zion Grand at a whopping 83% sold. So this is near the Havelock River Valley area lah. Now for the average PSF that they have been sold at, right, you can see Sky at Holland sold an average of 2953 PSF. Penrith achieved an average of over $2,800 per square feet. Faber Residence over 2100 PSF. And last but not least, we have Zion Grand about 3000 PSF on average. So overall, right, you can see other than Faber Residence, actually Sky at Holland, Penrith and Zion Grand, the PSF are not cheap at all and they are achieving very strong sales, easily above 80%. So right now you must be wondering, is it because these launches are actually very cheap, or what's going on in the market that buyers are actually going into all these launches? And do bear in mind, if you are one of those people that already got put a check for one of these launches, right, you should know that this has been all overly subscribed. So Faber Residence probably is the least oversubscribed one. For Sky at Holland, for Penrith, the numbers I think was like 3 to 4 times more than the number of units available to check ratio. So it was really very crazy. And is it really that good of a deal? So right now, if you are a buyer and in today's market, right, you must understand why the new launches are selling like hotcakes and at the same time why they are so heavily oversubscribed. So now I will cover on some of the key factors that I feel led to the very high take-up rates, especially for the recent new launches. So right now, the first thing I want to cover is actually the high resale prices that we see in the market right now. So first up, we look at the OCR region first. You can see I have two examples over here. So first up is Claremont. So this one is TOP in 2024 and this was the cheapest 3-bedroom premium, right, that I managed to dig out from Property Guru itself. This is at the time of recording lah. Maybe when the video is out you could have cheaper unit or what, but I'm just using this as a guideline or basis of what buyers looking at the resale market will actually see. So you can see for Claremont, this TOP 2024 unit, right, and this is the cheapest 3-bedroom premium, 2256 PSF non-harmonized for asking price, 2368 PSF harmonized. So this one I will adjust about 5% for the AC ledge, and this is not near MRT. So this is a 3-bed 3-bath 1130 square feet unit at Claremont, asking at 2.55 million. I mean, so right now if you are a buyer, then you see this is a newly TOP project, you might be thinking, is this really still worth it or not? Because in the end, this is already not the new launch already, this is just the most expensive resale over there right now. And if you look at the PSF, not near MRT in the OCR region, comparing to let's say Faber Residence or some of the other new launches, does this still make sense? Because just now I did mention Faber Residence is very near Claremont's area and still within 1k on Nanhua, whereas Claremont is not lah. And that one average sold at about 2150 PSF, and then here we already have an asking price of 2368 PSF harmonized. So I think this really takes it into perspective. Of course, I think this is a high floor unit compared to what we see at Faber Residence, but I think in the end you are buying a 2024 project versus what is going to be TOP in the 2029 timing. So after running through some of the numbers, I would actually think that Claremont at this current asking price definitely is not cheap, and it does make, let's say, Faber Residence a very attractive alternative. So for the second resale unit that I have, we have Riverfront Residences. Okay, so this is also a newly TOP project. I think this was in 2024 as well. This is not near MRT, also it's in the Hougang area. So these two projects are in the OCR area, and then you can see, right, this is the cheapest 3-bedroom premium in Hougang area, 2.2 million. So PSF that is non-harmonized 1983 PSF, harmonized PSF is 2082. So this is not near MRT, also not 1 km within any primary school, and we are already asking at these kind of prices, especially for the 3-bedroom premium. So am I surprised that the take-up rate for the new launches, Faber Residence, Penrith, is it that alarming? To me, right, it's quite okay because you can see actually all these cheapest units, right, they maybe have some undesirable facings or something about that unit lah. The more expensive one definitely will have better attributes as compared to what we have here, which is the cheapest listings. Maybe you can leave in the comment section if you think right now the resale market still makes sense or not, especially for those newly TOP resale projects, because to me, right, these are really not cheap. And let's say if I compare to riverfront residences versus maybe Faber Residence, I would think Faber Residence actually is still a very strong purchase, even though it's a lower rise development, because in the end it still has 1 km within primary school, but of course it's not a mega development, it's not high rise. Yeah, but I think it's still got quite okay there, because you're still buying a 2029 project versus what we have here at, which is 2024 at Riverfront. Okay, so next up we have Park Clementi's. Okay, so this is also at Clementi area within 1 km of Nanhua. Okay, so this is asking at 2.788 million. So this one TOP in 2023, and this is the cheapest 3-bedroom premium we have at Park Clementi's right now. 2591 PSF non-harmonized, and then after that we adjust for harmonization 2720 PSF. This is definitely not cheap for OCR project, and for this photo I can tell that it's below the 10th floor. And if you guys are familiar with this Park Clementi's area, it takes about 10 minutes walk towards the MRT, and they do have a shuttle bus for the MRT but it's about 10 minutes walk, so it's not that near also. And they are already asking this kind of prices, and I think this listing, because it's the cheapest one, eventually it will still be sold. You can imagine, even you can have some leeway for negotiation. Maybe it's still going to be transacting at 2.6 million, 2.5 million minimally. I would say this is not cheap at all. So right now you can see, once we connect the dots, if the buyers are looking for something brand new in the project, in the resale market, right, there isn't going to be much options. So last but not least, we have Pasir Ris 8. So this one is gonna be TOP soon, TOP this year lah. And the cheapest 3-bedroom, this is not 3-bedroom premium, okay? 3-bedroom normal one, 2130 non-harmonized PSF, and then this is 2236 PSF harmonized. So this is an integrated development, but it doesn't have a storeroom, it doesn't have a yard, and this is a ground floor unit. So this is asking at 2.18 million already. So that's why when I look at all these prices, I'm not surprised that, let's say I compare Pasir Ris 8 to Parktown Residence, right? The take-up rate for Parktown, I think it's kind of justified. When we look at Pasir Ris 8, this is the cheapest 3-bedroom that is calling in the market right now. Can you imagine if you add on the yard and the storeroom? Does the 3-bedroom premium at Parktown actually make sense? And also disclaimer, these are all listings available on Property Guru. So for those of you that is looking in the market right now, you can feel free to go and check out the newly TOP projects. How much is the cheapest 3-bedder or whichever bedroom type you're looking for? You can see that actually there isn't much options, and the available options are, even if they are the better layouts, better facing, they are not cheap at all. So now we have seen some of the newer resale listings in the market right now. Let's check out, right, what was Faber Residence and Penrith's indicative pricing. So you can see, let's say we take a look at the 3-bedders. For Faber Residence, the 3-bedroom basic was at 1900 PSF plus, almost 2000, and starting from 1.59 million all the way to 1.85 million at about 2002 PSF range. So of course this is the 3-bedroom compact, the smaller ones. But for 3-bedroom standard with the store, this is starting from 1.79 million at 2079 PSF all the way to the bigger one, which is 2 million at 2003 PSF range. So this was the guide prices that we had for the 3-bedders. Last but not least, we have the 3-bedroom plus starting from 2.195 million 2001 PSF all the way to 2.39 million 2003 PSF range. So when you compare, right, this is going to be a new project within 1 km of Nanhua Primary School, and you can see the resale listings in the market right now. It does seem like Faber Residence is a no-brainer pick, in my opinion. Maybe you can leave in the comment section which one you think has a lower risk in terms of entry price, and also which one has a longer tenure based on the remaining years. So for me, when I talk to my clients, when I share what's happening on the market, I think it's quite clear to be able to see based on numbers, right, which one has a lower risk of entry. I'm not saying the resale properties won't make money. I'm saying the resale property definitely have a chance of moving with the market based on inflation and a lower interest rate environment. But at the same time, which one has the higher potential to net you higher gains and also lower risk? This one I think is quite clear. You can see for yourself based on numbers. And for the next one, we have Penrith. So you can see for Penrith, they have the 3-bedroom, 786 square feet, starting from 1.973 million, and the PSS start from 2005. So you can see, right, some of the units at, let's say, Park Natura or this, the PSF is already similar to what we see at Penrith and is a much better location. So it really gives buyer not much choice to actually look at the new launch, because unless they are priced out the new launch, then they might consider the newly TOP projects. If not, then I don't think the numbers make sense at all, because the resale projects really quite expensive already, and on top of that, the supply is quite low. Okay, so now you've already seen what is going on in the OCR resale market. Let's have a quick look at what is going on in the RCR market. Okay, so here we have the first one, Woodleigh Residences. So this is also a 3-bedroom premium, TOP 2023. Asking price is at 2.88 million. The PSF non-harmonized is at 2573. Harmonized PSF is 2701. This is an integrated development to Woodleigh Mall and also Woodleigh MRT. And you can see from the photos, this is also a ground floor unit. So you can imagine for a RCR integrated development, this is a ground floor unit, but it's already asking at 2.88 million. Am I able to get, let's say, a unit at Penrith at 2.88 million for the 3-bedder? I think based on just now what I share, even for the bigger bedroom types, definitely you can get something within this budget range. And this is some of the starting from prices for the resale market. So next up, another RCR project. So now we go over to D15 area. So this over here we have is Amber Park. So from the photos, you can also see this is a low floor unit. Asking price is at 3.35 million. So this is a freehold project, okay? TOP 2023. So this is the cheapest 3-bedroom premium we have at Amber Park. And 3020 non-harmonized PSF. And then once we adjust for the AC latch, we are looking at $3,100 per square feet. So this is freehold D15 near to Tanjong Katong MRT. For this budget range, let's say we take a look at Mayor Blue. I'm not surprised also Mayor Blue units are moving, because this is not cheap at all. 3.3 million, and this is not a new project, new launch. It's already about 2 years old already. So that's why if you are a buyer in today's market, actually when you compare your options around, really the resale market options are not cheap at all. Okay, so next up in the RCR resale market, we have Foret at Bukit Timah. So this one is in the west, it's near Beauty World that side. So this is TOP in 2024. This is the cheapest 3-bedroom premium that I could find on Property Guru, asking at 2.78 million. $2,500 non-harmonized PSF, 2006 plus for harmonized. This is also a low floor unit, freehold development, and it's about 11 minutes walk towards Beauty World MRT station. So of course this one came of Pei Hua lah. Yeah, but other than that, I think at this PSF 2006 plus, I'm not surprised if like other developments, the units are moving even better, because this is not cheap at all. And you haven't even accounted that this is a 2024 project. You still add like, let's say, 5 more years to some of the newer projects that recently launched, like the like the Faber Residence, Penrith, all this. So next up we have is Jadescape. So this one asking price cheapest 3-bedroom premium, 2.72 million. So this one TOP in 2023 is about 2 years old already. Non-harmonized PSF 2578, and then harmonized PSF we are looking at 2700 already. So this one is within 5 minutes towards Marymount MRT, and definitely you got all the schools, convenience over there. But in the end, is this still a cheap option? My honest opinion, this is not cheap for a newly TOP project. $2,700 PSF, and if you compare to the current new launches, they're gonna be TOP 2029, 2028. There will be at least a 5 to 6 year age gap when compared to Jadescape itself. So right now, let's take a look at what is Sky at Holland's indicative price. So do bear in mind, this is near Holland Village MRT, beside the shopping mall, and also this is a CCR D10 project. You see the 3-bedroom compact, starting from 2.4 million, the PSF harmonizer 2006 plus. Then the second one, 3-bedroom premium, starting price 2.84 million, PSF also 2006 plus. Then you are a buyer in the market right now, let's say I compare to Woodleigh Residences or even Jadescape, the numbers at Sky at Holland don't make sense, because when you compare to what is going on in the resale market, the cheapest units there, also adjusted for harmonization, already $2,700 per square feet, and that one will be 5 to 6 years old by the time Sky at Holland TOP. So right now, there's there's a very huge pricing gap between the resale market and the new launch market. But that story will be different when the new launches next year come, because the land bid prices I've been sharing with a lot of my clients, you can see the big jump from this year to next year one. So for those of you that is still on the fence, don't know whether this is a good buy for you, etc., you can feel free to reach out to me, WhatsApp at 84849302. I'll be able to give you a more detailed analysis for what I think is best for your current situation, because from what I see, I think it's quite logical why Sky Holland so many percent, 99%, 98%, because they are essentially selling a CCR project with similar attributes to an RCR project and at a lower PSF, because the cheapest unit here is already cheaper than what we see some of the resale projects. Yeah, so I think this one you all have to bear in mind, like this Sky Holland is done already. Yeah, so you don't want to just hope on like what already has happened, but look forward. You can see, right, the remaining launches and also the launches next year, what's gonna happen. Okay, you must be able to forecast that. So same thing here, you can see these are the starting prices for Penrith. I will talk about the 3-bedroom again. You can see 1.9 million range, and then the starting PSF is 2005. This is already cheaper than what we see at Woodleigh Residences, Forest, even Jetscape. So when you compare all this, I think it's a no-brainer why people are aiming into the new launch market, especially even though the PSF is in the 2008-2009 PSF, because when you look realistically at what is going on in the resale market, there is nothing cheap. Okay, so now to wrap it up, you already have seen the cheapest 3-bedroom premiums in the OCR and the RCR resale market. I won't touch into the CCR because it's gonna be a similar trend. The next point that I want to highlight is the new EC benchmark prices and why this is important. Okay, so now to bring you back in time, right, you can see this was a EC site awarded to Sim Lian, and this is also known as Orel of Tampines. So this one is sold to Sim Lian at October 10, 2023, and then you can see, right, based on the numbers for the highest PSF transacted for the 3-bedroom at Orel, this is at 1882 PSF. So this resulted in a 2.61x multiplier from the land bid price. Moving forward, 1 year since Sim Lian bidded for Orel of Tampines site, and then in 2024, 24th of October, you can see Sim Lian submitted another record-breaking price of 768 PSF PPR for the EC site at Tampines Street 95. So this one is going to be launching soon. If you guys are interested, you can also feel free to reach out to me at WhatsApp 84849302. So here I just want to do an estimate. If previously also a record-breaking price, and then using the same formula, same developer, same pricing strategy, right, 2.61 multiplier, we are going to be estimating a highest PSF for an EC in Tampines area to hit over $2,000 per square feet. So I think if the ECs are also creating new highs every year, I'm not surprised why the new launch market, especially the OCR, RCR and even the CCI region, are being snapped up like crazy. Because for EC, if they can hit the $2,000 per square feet, right, does it seem affordable to you? I mean, for those of you that is in the older generation, you are in the era where EC was in the 3-digit price range, but now it has already crossed estimated to be $2,000 per square feet on the highest range. So this is quite crazy. For Tampines EC, we are already going to be seeing this kind of estimation of pricing, and this is on the high range. Even if we give it a more conservative estimate, 1008, 1009 PSF definitely will be the huge norm at this Tampines Street 95 EC. So now fast forward to one more year, which is this year 2025, 5th of August. Here you can see it's no longer Sim Lian, but here is CDL submit another record-breaking bid of 782 PSF PPR for EC site. So you can see for EC, I think we're looking at about 10 plus, 20 plus PSF growth per year, and this is at Woodlands area. This is near Woodlands South MRT. So using the same formula, right, this could also work out to be easily over $2,000 PSF. When I look at this, it seems like EC is also highly profitable in the land bid prices. Every year we are seeing record high price for EC. So next year, don't be surprised if we see another developer submit another record breaking bid of maybe $800 PSF PPR for EC plot. These are the things that when you look at the trends, you can see if the EC are easily creating new highs. If you're a buyer in the market right now and then you maybe cannot buy EC because of all the income ceiling and all that, then if you look at the resale market for the newer ones, you also don't really have that much option because in the end, the 3-bedrooms are not that cheap. Now then, you look at the new launch market, new launch actually offers similar pricing and it is going to be a newer product. But of course, you have to factor in that maybe you have to rent for a certain period of time, or maybe you have to stay, make other accommodations. But just looking at purely pricing perspective, EC has been a very strong benchmark for the new launch land bid prices. So with the EC prices going up, right, I'm not surprised if also the new GLS creating new highs as well, because cannot be EC you can hit 2000 PSF. The new launches are no brainer one, cannot be minimum launch 2000 PSF one. And then now, right, I want to highlight again Faber Residence indicative guide prices. You can see for the 3-bedroom, you have about 1900 PSF and 2000 PSF, 2001 PSF starting from, and their maximum range was about 2002 2003 range. Does it make sense to go for, like, let's say Faber Residence over the upcoming Tampines EC, or do you think Faber Residence is a better buy? Okay, so I think this one is very subjective to debate, but I would say Faber Residence, you are not really subjected to the income ceiling, and also you don't have the MOP period of 5 years. Because for those of you that don't know, EC on top of the 4-year construction period, you still need to factor in another 5 years before you can officially sell your property away. Whereas for Faber Residence, it does offer a unique, it does offer a different scheme, which is as long as the seller stamp duty of 4 years is fulfilled, it will make sense to sell a property as long as the exit price is good enough. But if not, you can still continue to hold it or even rent it out. And for Faber Residence, the rental yield is fantastic there because I think they are near the International Business Park area, so the rental yield is very solid there also. Yeah, so I think overall, you have to weigh your comparisons and which one makes the most sense for you in terms of the numbers. Of course, location, there are two very different locations. If you are a Westie, you can accept this. If you are Eastie, definitely Tampines one, it makes sense for you. But just based on a purely numbers perspective, right, then I think this one totally makes so much more sense because you are buying reputable project from a developer that is renowned, and also the PSF is attractive. Okay, so now for the second reason why we see the new launches having such a strong take-up rate is the low resale supply that we have. So just now, like I mentioned, is the high prices, right? In combination with the high prices, we also have low supply in the resale market, especially for the better developments. So I'm just taking an example. Okay, this is an example that I already done for my client. When we were looking at Penrith, this is what we found out in today's market. So there were 5 listings available at Property Guru, and these are all the resale 4-bedroom at Queenstown area. So over here you can see the cheapest unit we have is at Margaret View. So this is a 4-bed 3-bath 1184 square feet unit, 2.65 million. So asking is about 2002 PSF range, and there are 3 duplicates for the cheapest 4-bedroom type at Queenstown. And for those of you that are familiar, Margaret View is actually the smallest plot in Queenstown and is not really within walking distance for Queenstown MRT and Commonwealth MRT because it's in between the two sites. Okay, so I think overall in terms of connectivity and land size, landscaping of the development, Margaret View is definitely not the most superior product there. I think over there Sterling Residences, Commonwealth will be even more desirable. And if we remove these 3 duplicates at Queenstown for Margaret View, we only have 2 other listings available for the 4-bedders. And for the next cheapest one, which is at Queen's Peak, this one is a huge unit. Okay, this is at 1500 square feet, and you can see this is a high floor unit based on the photo. Asking price is at 3.8 million. So PSF is already 2005 plus, and Queen's Peak, this was a project that was built in 2020. So in today's market, it's already about 5 years old, and the $2,500 per square feet, we haven't even adjusted for harmonization. And then you can see that actually, if you want to buy a Queenstown condo other than Penrith that time at the launch, what other options do you have? Because your next cheapest option, if you don't want something not really within walking distance like Margaret View, the next cheapest one is Queen's Peak at 3.8 million already. And 3.8 million is not cheap, you know, for a resale 4-bedder. I mean, you can even buy a landed at this price. I mean, the location maybe not as good lah, but there is a lot of options available. But if you specifically want Queenstown, then I'm not surprised why Penrith, even their bigger 4-bedders takeout rate was so strong, because this is what is happening there in the resale market. There's nothing to buy already. Even though sometimes you can say, hey, I think the resale one, 1,005 square feet, more worth it leh. But now if you look at the quantum, right, is it within most Singaporeans' reach or not? And if you don't like Queen's Peak, what other options do you have? Because even if you want to buy at Sterling, want to buy at Commonwealth Towers, there's nothing there for you to buy. So in terms of what we have in the supply, in the resale market, there is no second option. And last but not least, one of the key main factors that I feel is moving the market right now is the projected interest rate cuts. Okay, so this is an article from JP Morgan. The Fed and the US side, they are projected to cut rates for this year and also next year. So I'm not surprised, because a lot of my clients, they actually cash out from their treasury bills, from their FD, because during the last, I think 2-3 years ago, the rates was very good when they first locked in the FD. But I think that time, you could easily get 3% plus, even 4% I heard. But now, right, because of all the interest rate drop, actually it doesn't make sense really to keep your money in all these T-bills and FD, because the interest rate too low, not attractive. So right now, a lot of my clients, they're actually looking to park their assets into low interest instruments and not so volatile one, which is, one of them is property already. I think maybe another asset, I don't know if you dare to consider stock market as such an option, but I wouldn't think it's low risk as property lah. I think property, even you can buy the resale market, rent it out, I think it's still a very logical move. So I'm not surprised why the resale market are at this kind of prices today, because there's a certain group of people, there's people that always can accept new launch, and there's people that die also don't buy new launch one. So those people, what they do is they'll take their money from the T-bills and all that, they will flood the resale market, and that's why we see, I think recently I also am selling a 3-bedder at Tampines Trillion, so the range was like 1.75 million. I had so many inquiries, and I think at least half of those inquiries, they are buying for investment. Okay, for investment, because they firstly asked me, hey, this unit, is it tenanted or not? And I told them, that the tenancy will end early next year. Then they will ask me, hey, is there a chance that the unit tenant will renew the tenancy? Because I'm not buying for own stay, I'm actually just wanting to invest in a property, and then I prefer if it's no gaps in the tenancy. So at least half of the inquiries are from all these buyers, right? They're just looking to park their money into property. So I'm not surprised why the resale market is moving. And do remember, this Tampines Trillion is not a brand new TOP project. It's been a while, I think it's about 5 years old like that. So I think in the end, if you see in the resale market, these are the buyers that is also competing with the genuine resale buyers as well. So yeah, you must be logical, and then I'm on the ground, so I can really tell you like what's going on and the buyers' behavior at different budget range. Alright, so now for the next segment, I'm just gonna do a quick shout out to those owners at Springleaf Residence, and also the 2 clients that reached out to me and then trusted my analysis. Okay, congratulations to you guys. Okay, because just to give you guys some context, for Springleaf Residence, the land plot was actually bidded by Guapo Land at 905 PSF PPR. So I think the launch prices was about 2001-2000 range. And now the neighboring plot, okay, this is so-called mixed development, because it's right above the Springleaf MRT and also mixed use. This is bidded at 1062 PSF PPR. So definitely it's about 150 PSF gain already in terms of land price. So that's why congratulations to 2 of my clients and also all the other Springleaf Residence owner, because this is one of the fastest gain that I've seen in the recent market, because this one, I think about 2 months only since Springleaf launch, and we already have a land price gain of about 150 PSF gain. So definitely very, very impressive. Just to give you a context, right, of how much I estimate they should be launching at, here you can see I have a screenshot of the Springleaf starting from prices below. Then you can see it's about the smaller bedrooms 2000-2001 range, then the bigger ones about 2000 PSF. And if we take a apple to apple comparison just based off the 150 plus PSF increase on the land price, this new plot, this mixed D at Springleaf, right, should be launching the 1-bedders at 2004 PSF, 2 bedders should be launching at 2002 PSF, 3 bedders should be launching at 2002 PSF, 4 bedders should be launching minimum 2001 PSF, and the 5 bedders should be launching at minimum of 2002 PSF. So this is also exactly the same thing as Springleaf, and this is a smaller plot some more. OCR prices in 2026 and 2027, this is gonna be a reality. So that's why I think you guys have to understand what's going on in the market. And this is also near MRT, but no amenities nearby. Of course, you're gonna be having a mixed development here. Got I think grocery, supermarket, all this. But to be honest, for Springleaf residents to gain like 150 PSF based on land price in such a short time, right? I would say the surrounding area there is no change one. So this is really a very good entry price. And I would say there is still a couple of units remaining at Springleaf at the old pricing, which is 2025 price. When you look at 2026 and 2027, you will actually regret if you never enter Springleaf at the 2000 PSF range, because honestly when I look at it, I think it's a no-brainer. The land price is already done, and we already done the math that the land should be selling at the kind of prices. So you can reach out to me if you want to find out more actually how I look at this whole Springleaf Lentor area. And I think you must make sure on top of prices, you must understand the supply and demand over here. How is it like? Looking forward to hear from you guys. Okay, so now that I have covered on the market updates in the past few weeks, I hope you guys have a better understanding of what's to come this year and also next year. So right now, let me cover on one of the last few launches of this year, which is the Sen. So for those of you that's not familiar with the Sen, so we are in between Hume MRT and Beauty World MRT. The closer one should be still Beauty World MRT side, and we are right beside Park Natura and also Verdale, and we are within 1 km of Bukit Timah Primary School. I think other than that is in the general Beauty World area itself. I won't delve too much into this. And over here we have the guide price for the Sen. So this is in D21. You can see the starting from prices for the 1 bedder 452 square feet starting from 993,000, and the PSF is about 2002. 2 bedders 678 square feet starting from 1.499 million. 2212 PSF starting from 3 bedroom 872 square feet starting from 1.936 million. 2220 PSF, and the prestige unit, which is 2.899 million and above, about 2003 PSF. So for those of you that want to take a look after my review on it, you can feel free to contact me at WhatsApp 84849302. I'll be looking forward to hear from you guys. Okay, so back to the video, you can see even based on the price trend itself, for the recent launches, most of the developers, they have been pricing the bigger units, especially the 3 and 4 bedders, even the 5 bedders, at a higher PSF as compared to the 1 and 2 bedders. I think this shouldn't be a surprise, because if you can see in the resale market, the 1 and 2 bedders are also lagging behind the 3, 4, 5 bedders a lot more, even in terms of PSF. And I'm not surprised because nowadays I think people are quite knowledgeable already. A lot of research has been done. So we all know that generally the 3, 4, 5 bedders are more easily sold in the resale market as compared to the 1 and 2 bedders. And if the developer are pricing it this way, it should be also quite logical. So just to give you guys some context, right? So this one was Sustain Land. They bidded 841 PSF PPR for this GLS site at De Souza Avenue. I was quite surprised because this one it was at 841 PSF PPR, but the launching price, I thought it would be lower. Okay, this is my personal opinion. But I think the developer, they just got the land cheap, but doesn't mean they have to launch it cheap lah. And to be honest, right, when you look at the prices here, let's say that we talk about the 3 bedder at 1.9 million. If you look in the new launch market and the post-launch market now, are you still able to get 3 bedder below 2 million in the RCR region? I would say the answer, I'm quite confident, is no lah. So I think Sustain Land, they are probably not aiming for like 100% sale on the weekend kind. In the end, they have 4 years to slowly sell their development, but I would say they are getting quite a bit of profits because you see for Springleaf residents, the land price was 900-ish and they launched about 2000 PSF range. So the margin for Wago Land actually was very thin compared to what we see at the Sen. But am I saying like the Sen won't sell out well? Actually, if your budget is below 2 million, you want a 3 bedder, there's really not much options already. And if you see next year, I don't think there's going to be that much options also in the RCR region that you can get a 3 bedder below 2 million. Okay, so now for some project info for the Sen, you can see they have 5 blocks of 10 stories, so maximum 10th floor lah. Got childcare center, basement car park, swimming pool, communal facilities. This is in D21, 99-year leasehold. The site area is about 19,000 square meters. The childcare center 500 square meters. Total number of units is 347 units. So this is quite a low density development. It's gonna be quite nice, well spaced out. And you can see we have a 1:1 car park ratio, 347 car park lots. And then for the residents, you also got like 60 bicycle lots. Expected TOP on paper August 2029. Okay, so over here we have the unit mix. Then you can see for the 1-bedders we only have 10 units lah. So really there's not much options here. Remaining is the 2-bedders, about I think few hundred units, and then 3-bedders another 100 plus units, 4-bedders about 40 units. Yeah, so this one kind of makes up the total of 300 plus units we have at the Sen. I just want to highlight what I see for the 2-bedders, right? I was a bit surprised to see the maintenance fee for the 2-bedders to be at 450 per month, because I think this one is actually not that far off from what we see at like Permanent Peak or this. Yeah, so I mean, you can leave in the comment section, do you think this is a fair price for maintenance fee in this area lah? And then even the 3-bedders also can hit 500 plus dollars per month. And now the number of units per floor, we have 9 units per floor for block 222, 228 and 230, and serving 3 lifts. And for block 224 and 226, we have 4 units per floor and 2 lifts. So this one should be the more prestige blocks. Okay, so over here we have the artist impression. I think it's quite well designed. It looks quite nice. Kind of reminds me of Midwood a little bit. And you can see we got 2 pools, and then we have a drop-off point. It's gonna be quite grand and well spaced out. Okay, so over here we have the site plan for the Sen, and then you can see common facilities. And the first story, you got the landscape deck, and then you can see this is how it will kind of look like on the ground itself. And here we have the second story, which is the pool deck for the lap pool lah. Yeah, so for this one, you got the gym and all that. So they will be on a second story. So there is some sort of elevation lah. Yeah, whereas the smaller pool and the tennis court, all this, they will be on the first floor. So right now we can see, based on the master plan, right, the Sen will it actually repeat a similar story to what we see at Springleaf Residence, because this is why I like those new launches, right? Then right beside you got already plots of land that is zoned for residential, especially in the reserve side. So I really like this because there is a possibility that the future developer can bid higher prices versus sustained land for the Sen, and this will actually help raise the prices up. Similar story to what we saw at Springleaf Residence. So now I'm gonna do a resale comparison, right, to see whether the Sen is actually better than the resale counterparts. So here we have is Verdale. So this is the newest TOP project over there. Also RCR, same district, TOP 2023. The land size is 153,000 square feet, whereas the Sen is at 207,000 square feet. So definitely the Sen is already more superior in terms of the land size itself. So that's number one. Number two, Verdale versus the Sen in terms of the unit density, right? I think it's going to be quite similar. You see, for the Sen, I've done a rough calculation, 596 square feet per unit, whereas Verdale, we're looking at 593 square feet per unit. And for the buyer's behavior here, you can see 86% belongs to Singaporeans, and then we have a 50-50 split between private property purchasers for the previous address and also HDB upgraders. Okay, so now onto the site plan comparison. So on the left we have the Sen, and also on the right we have Verdale. So you can see for the Sen we have 6 blocks covering this plot of land, and then you got 2 swimming pool, 1 tennis court. Whereas for Verdale, you got 7 blocks over here. So you can see visibly, right, in terms of how much land the blocks actually take up, Verdale already lose out to the Sen. Okay, so that's point number 1. I think I do have to point out for Verdale, right, their pool is much bigger because it's like one big centralized pool, whereas the Sen one, I think maybe it's spread out into different areas. In terms of landscaping, I think it's going to be a nicer touch because you got bigger spacing between the blocks. Whereas you see, actually for Verdale, right, you have a couple of units that's very close to each other. I think this is the slightly differentiating factor lah. But I think overall for site plan comparison, the Sen will be a more superior product as compared to Verdale. So next up we have is the unit mix for the Sen versus Verdale comparison. To be honest, when I look at the unit mix in terms of each bedroom type, I think they are quite similar in terms of ratio. So I think there's not much difference for the unit mix comparison. Okay, so right now we're gonna do a layout comparison for the Sen versus Verdale. So on the left side we have is Verdale. Okay, big. And on the right side is the Sen layout. I know there's a couple of Sen layouts for 2-bedders, but I'm just choosing the best one in my opinion, okay, the most value for money. So this one is the 678 square feet harmonized layout for the Sen. Very efficient. We have a enclosed kitchen with window, common toilet also got window, and a very good size balcony dining area. And now if we look at Verdale, right, you can see this is a 743 square feet layout, non-harmonized, and this is a 2+ study already. So even for their bigger 2-bedder, right, to be honest, their layout is not impressive, because I think when I look at the Verdale's layout, right, it's not very efficient, and the kitchen is not even enclosed. Yeah, it's a bit awkward when you see the entrance you come in, right? It is your kitchenette area, you want to enclose it, also very difficult. So I think I'm not surprised why the 2-bedder's performance, later I'll share, we have such performance. And also you see like their common bathroom also don't have windows. So when I compare it side by side, I do see some merits for the Sen's 2-bed 2-bath. It does seem more superior even on the layout level. And now you can see this is Verdale's 2-bedroom profits. So you can see we have from 50,000+ all the way to 200,000+. In terms of annualized gains, to be honest, it's not fantastic. You got some even 0.72% all the way to we have one is like 6.13%. But I think these two maybe a bit more anomaly. The more commonly number that came out probably is about 2% plus, close to 3% range. Okay, these are the profit range, 50,000+ to 200,000+. With a better site plan, better layout, will Sen actually outperform Verdale with this track record? I think my answer is yes, but how much more, right? That one is really subjective, because in the end, if you guys know in the 2020, 2021 and 2022 era, there's a lot of other projects with this same budget range, they profited a lot more lah. So I think here it does say a lot about their buyers' behavior, especially for the 2-bedroom types. If you want to find out more for the different bedroom types, what is the buying behavior here, what's the profit margin, if the layout is superior at the Sen, all this, you can reach out to me at WhatsApp 84849302. I can share with you guys a more specific analysis depending on your budget range and what you're looking out for. And next up, you can see at Verdale 3-bedroom, right, this is the profits. So we have a total of 4 transactions, and then you can see the percentage annualized gain is much better as compared to 2-bedders. So here we can really identify that there's a significant preference for the 3-bedroom layouts over the 2-bedroom layout types here. Yeah, and is Verdale's 3-bedroom better, or is the Sen 3-bedroom better, or is it even comparable? Okay, so here we have for 3-bedder range profits about 300,000 to 400,000+ range. Is it that awesome? Actually, it's okay lah. It's okay lah. But there's certain regions that definitely outperform what we have here based on the same budget range. Yeah, so I think very important if you're buying for investment, you need to take a look at the numbers and whether it makes sense for your own scenario. Okay, so now another resale project that's nearby. This one is not really an apple-to-apple comparison. This is Park Natura. Okay, so this is right beside the Sen, and this one is in a different district already. This is under D23, but strangely they are side by side. This is a freehold development, TOP 2011, and the land size, this one is very similar to the Sen. This is at 213,000 square feet, and if you take a look at the number of units we have is 192. So I think in terms of land density per unit, this one is much more superior than the Sen. And this one, if you see it's gonna be quite similar to what we see at the Sen. You got like a few pools, and then you got tennis court at the top. So it's quite similar to the Sen lah, except that it is freehold. I mean, then of course you can see the blocks, they are all side by side for each other, and it's lower rise. I think maybe same floor, it's not so high lah. I think overall here, the block to block distance is actually a bit near. So this will be quite similar to what we should expect at the Sen. So here we have the unit mix for Park Natura, and you can see their layouts are significantly bigger. Their 2-bedders minimally already 1,000 square feet, and you have very little 2-bedder units, only got 9. 3-bedders is your majority here, followed by 4-bedders, and the 3-bedders also very big, 1,003 to 1,004 range. If you are the penthouse ones, you even hit 2,000+ square feet. 4-bedders minimal also 1,007 square feet all the way to 3,000 square feet, and the 5-bedroom you got 2,000 square feet all the way to 3.1k square feet. So here I have the layouts for Park Natura's 2-bedder. You can see for the 1012 square feet 2-bedroom type, you got the landscape layout, but then again you can see you have a planter boxes now for the rooms and the living room, but you got a very good size kitchen, yard, and then you you got a household shelter. Both bathrooms are having windows, so I think overall this is quite a decent sized two-bedder. And then now we look at the 3 bedrooms. You can see actually the kitchen and the yard and the household shelter, right, is very similar size to what we see at the 1012 2-bedroom layout types. But for this one, they decided to do a non-landscape layout for the 3-bedder, for the smaller one lah. I also not sure what is the direction with this, but in the end they have the non-landscape layout, but they got balcony and then planter in the living area, connecting also to the master bedroom area there. And then you can see decent sized bedroom types, bedroom 2, master bedroom, and bedroom 3. This one is also like semi dumbbell layout kind. I think a bit less common nowadays. I think another similar development maybe is the Antares 3-bedroom dual key layout. Yeah, but other than that, this one is less commonly seen already in today's market. Yeah, but this is also 1003 square feet. Okay, so right now I'm gonna be comparing a resale versus new launch comparison, right? So this one will be, imagine if you bought Verdale at the launch itself versus if you have bought a resale Park Natura 3-bedroom instead. Which one would have netted you more gains? Okay, so now let's do the numbers. Here I'm just taking the Park Natura's most recent transaction, and this one quite a good gain lah. Okay, we have here the February 2025 within a 3-year holding period. The reason why I didn't take the September transaction is because it was over a 17-year period, so it's going to be quite hard to do a apple-to-apple comparison lah. So I'm just using the 3-bedroom transacted in February. Okay, then you can see netted a 7% annualized return at a profit of about 500,000. Okay, of course here outlay is going to be slightly higher than what we see at the Verdale, because this is quite a big 3-bedroom unit at 1.9 million back then lah. Today they sold at 2.4. And Verdale, right, if you see you got range from 1.7 million, then most of them they exceed about 2 million, 2.2 million. So just to compare, I'm just going to be using the highest one for the Verdale units, which is the 7% annualized gain, right, at 434k profit as a similar comparison. Okay, then here we will see whether you take the progressive payment for new launches, is it more higher returns on your equity, or if you bought the Park Natura unit in the resale market and choose to rent it out, which one has a higher ROE? Okay, so here I have done a side-by-side comparison. Then you can see for BUC property number 1, this was also known as Verdale. The purchase price about 1.7 million range, and we used the annualized growth as we see just now, right? Well, just put in 7.37% just for easy math, because both of them have different holding period. And when we look at all this, then after that the bank interest is about 26,000 if you buy based on the progressive payment, and then for the rest you don't really have much cost lah. So after you net all the expenses, we are expecting about 26,000 in terms of expenses. And then for Park Natura, when they purchased that time, it was at 1.9 million, and I also used the same percentage in terms of annualized growth at 7.31%. And if we choose to rent it out for rental income, we are looking at about 5,003 per month, and I expect maybe in this 3-year period, okay, do bear in mind I'm using a 3-year calculation because they are all based on 3 years. Last time SSD 3 years, now SSD is 4 years, so we have to change the number accordingly. And estimated gross profit is going to be significantly higher than what we see at Verdale. Verdale is 419,000, and then for Park Natura is 628k because of similar growth rates in the resale market, and also on top of that you have the rental income. But now, right, after we factor in what is the bank interest that they pay over the past 3 years, it'll be about 60,000. And then the maintenance fees, if I check online, is about 500 plus. So over the 3-year period, we will account to be 20 plus thousand. And we still need to pay property tax about 28,000 and income tax based on your bracket. Okay, this one is about works out to be 27,000. And of course, you still need to add in furniture fittings in case anything break down, and also rental agent commission. And this works out to be a expense of 149,000 over a 3-year period. So now, right, after we compare their profit estimated versus the expenses incurred, right, you can see for Verdale, the net profit you clock in is about 393,000. But of course, for Park Natura, you managed to clock in a higher profit because your outlay is more than 478,000. And the ROE is very similar for Verdale versus Park Natura. Of course, this one, I think for different areas will have a different story, but what I'm just showing you is what is happening over here, which is potentially what you can expect for the Sen. And maybe you can consider even the resale nearby also, that's completely up to you. But here you can see the strategy is comparable, and based on past data, this is what we see. Which one will you choose? Because I think for me, right, I think if the percentage return on equity is similar, I will go with Verdale because I don't have to deal with tenants. And when you deal with tenants and you deal with vacancy period, actually it's a lot more hassle as compared to what we actually just pay in terms of the progressive payment. But of course, if you use just now the other Verdale units with the lower percentage gain, definitely will give you a lower ROE lah. So I think this one, I'm just using the highest one just for simplicity, and then you can see side by side. Actually, in terms of percentage gain, right, it's very similar one. Yeah, you're not losing out when you buy the new launch, and you're not losing out if you buy the new launch in the resale market. Yeah, so I think this one, maybe you can leave the comment section which one you guys think is more logical. And alright, so now you already have seen how I analyze a new launch versus resale in terms of return on equity, and also which one makes more sense for you guys. And now, if you are interested in the Sen, let me run you through how I actually prepared my clients for the most recent launches, for example at Penrith. Then for those of you that after you watch my video, you want a personalized consultation for the Sen and you want to take a look, you can feel free to reach out to me at WhatsApp 8484-9302. So for the very first meetup, I think it's very important to understand what is going on, especially in the Queenstown area. So this one was more for Penrith. For my clients, I've done a 3-bedroom Queenstown analysis, right? Then from here, you can kind of understand what is the 3-bedroom trends in Queenstown first. Why did Queen's Peak and Margaret View underperform the other resale developments? So you can see the strong performance came from Queen's, Sterling Residences and Commonwealth Towers, whereas the weak performance came from Queen's Peak and Margaret View. So from here, we generally want to repeat the strong performers and why they actually perform well. We want to dissect deeper into the resale market versus why the weak performers at Queen's Peak and Margaret View, we don't want to repeat those. So as simple as that, right? When you look at Penrith, does it have more attributes of the strong performing ones or the weak performing ones? So when more boxes check for the strong ones, then it gives me and my clients more conviction to enter Penrith. But if it has more similarities to Queen's Peak and Margaret View, then I think all the more you should be more cautious of Penrith. So in order to do a deeper analysis why there's a certain project that's outperformed the other two projects, you can see here I've done a resale comparison for the entire Queenstown. We're going to be comparing in terms of land size. Is land size the main differentiating factor? What about development density? Does Penrith actually stand out amongst this, or will Penrith repeat what Margaret View and Queen's Peak has done in the resale market? And also demand and supply, right, for each particular bedroom type. So for this, let's say this is the 3-bedroom example, so I've done the demand and supply analysis, but also I've done for the 2-bedders and 4-bedders. They all tell the different story even at the same area, Queenstown itself. So for the next part, I'm going to be studying the resale trends, right? So this is just an example at Sterling Residence. I've done each and every one of them for Queen's Peak, Commonwealth Towers, all that, but I won't be covering all those because it will drag too long now. But let's say for Sterling, right, you see I got managed to separate out for the 3-bedroom compact versus the 3-bedroom store plus 3-bedroom plus yard, all this. So for all this, you can see my client was able to identify with clarity what is the PSF gap that you should pay for Penrith's 3-bedroom compact versus the premium, because you can see over here, we can clearly see that Sterling Residences 3-bedroom compact commanded 50 PSF lower than what we see for the 3-bedroom premium types at Sterling. So if this is similar in the resale market, then I would say for Penrith, even the developer price higher for the 3-bedroom premium versus the compact, as long as the PSF is still within this resale market range, then I think it's still a safe entry price. If not, then the alternative will be a better entry, because here resale, I'm very confident Penrith, when we hit the resale market, it will normalize to this PSF gap that has been accepted at Sterling Residence. Okay, so here measuring what's the PSF gap between compact versus premium in the same development, we also need to see compact or premium, right, can yield more profits in terms of percentage and also quantum gains. Okay, how much premium in PSF to pay in terms of facing, and we have to also adjust for harmonization and age gap. With all this information, I already can determine what is a safe range to enter at Penrith for the different 3-bedroom types, especially for my clients. So now we also study the resale trends. So you see this is for the layouts. We have Sterling Residences versus Queen's Peak. So I think just to give you a summary, right, Sterling Residences, why the 3-bedroom layout is so strong, because it does seem a regular 3-bedroom layout. There is no fault with it. But you see for Queen's Peak, right, you have a very unique problem. They have a private lift for the 3-bedroom types and also an open kitchen. I think generally open kitchen is not very well accepted, especially for the 3-beders. And on top of that, you got additional wasted space in the big balcony area. Yeah, so I have done the layout analysis for all the resale nearby also. So for my clients, right, we already have a bird's eye view of what is happening in the Queenstown resale market, and this will give us an informed decision to make for Penrith itself, and whether Penrith is a more superior or a more lacking product. And we already learned the buyer's behavior here. So means if you buy like a 3-bedroom normal layout type similar to Sterling, right, chances are you can get a higher PSF at, let's say, Penrith as compared to what we have if the layout is similar to Queen's Peak itself. Okay, and last but not least, you need to see, does it stand out? If you buy Penrith, does the layout stand out? And also, does it fulfill the needs of the Queenstown buyer? So now onto the unit selection for the development itself on the launch day. So you can see we got 4 layout types: 786, 850, 936 and 1066. If you have the budget 786 all the way to 1066, which one will make the most sense in terms of percentage gain, and which one I do foresee being the most easy to sell in the resale market in Queenstown? So all these things I will have already compared to the resale market, and we have all the data available. And also for Penrith itself, you can see there's 4 layout types, right? On top of the pricing, all that, we still need to do an internal layout comparison, which one is the best, followed by ranking. Of course, if your queue is number 1, you can choose whatever you want lah. Yeah, but if your queue is not so good, maybe in the middle halfway, then you are stuck between 2 choices. You have to make the decision which one to go for if you have the option between 2 lah. And also, I've done my own price simulation for Penrith from the indicative prices. So I think this one kind of gave my clients not much surprises, and also I'll be using this very closely with the resale prices that I've recorded just now, just to show like what is the price gap, what is transacted for like 3 bedrooms in the Queenstown area, what's been done, then is entering Penrith at these prices logical or not. So on top of comparing just in the resale market in Queenstown itself, I will usually also compare, right, what is happening in the new launch market for the post-launch units. So here you can really see, like for example, Queenstown, when we hit certain PSF, is there a better alternative, or is this still a better buy? Let's say we talk about Zion Grand. Zion Grand, maybe they hit about 3000 plus 3003 PSF. At 3003 PSF, is there a better alternative when we look in the RCR region, or maybe even the CCR region itself? So all these things, at least when we do a comparison before my clients even go for the booking day at Penrith, they already know, okay, if I don't manage to get a unit at Penrith, then maybe I can consider something else. But if I get a unit at Penrith, I have to make sure that I'm not really overpaying to what is already still available in the market, and even in the resale market as well. Okay, so that's it for me today. If you like my video so far, you can feel free to leave a like and subscribe. And also, if you like this kind of in-depth analysis for new launches, you can check out my YouTube channel for other reviews that I've done. And at the same time, if you want to take a look at the Sen, the preview starts at end of October, so we are starting pretty soon. You can feel free to reach out to me at WhatsApp at 84849302, because I've already done the analysis for the Sen using the resale nearby, and I'm quite sure this will give you very valuable insights to the buyer's behavior over here. And you can see I've already done it for Penrith. I'm very sure this will be very useful if you are considering the Sen as well. Alright, looking forward to hearing from you guys, and that's it for me today. Bye!